always would help to know, Tom, whether it's a sharp, scary spike down, which a lot of times the other side looks just like it, or people are hoping for that so much that they don't see that it might have longer to go. Do you get the feeling that this is not going to be a major sell-off?
For now, I think it is the former that you described. We have over 3 days, suddenly markets reversed and, Japan down over 20%. And as you're pointing out, the NASDAQ could even, decline further. Declines like that are generally symmetric, but you have to watch the VIX. And when the VIX peaks and starts to roll over and fall down, the recovery can be just as quick. I think a lot of this depends on whether financial conditions in the U.S. start to tighten, meaning like, do markets seize up? But with interest rates falling, the consumer's still in pretty good shape. I think on the other side of this, it'll look like a growth scare. But it doesn't mean that
it's a growth scare.
Yes.
It's kind of interesting that it almost looks like the market's showing what the Fed didn't do again. It's almost like once again they're there, but not really ahead of what's happening, and they're reacting, not anticipating, kind of again.
Yes.
On the way up and on the way down.
Yeah, the 2 years is signaling that the Fed is behind because 2-year yields have fallen further. But it does seem like, as we look back, a lot more this is because of the surprise hike from Japan and the sort of knock-on effects from there. If that is the primary source of the reaction, I know it's going to be tumultuous for markets, but for the U.S. economy, it's not necessarily bad news. And I think that's why we can balance.
Some of your great and accurate calls have been based on inflation coming in like you thought, much cooler than the market was thinking at the time. I guess the flip side of that is that there can be the dual mandate, there can be labor market weakness associated with why that's happening. Was the asymmetric risk, maybe it wasn't asymmetric, maybe there was a great risk to the job market.
Well, markets don't like surprise. I mean, Friday's jobs report was disappointing.
How far back did they go with revisions down, too? It almost looked like the whole story, the whole narrative that we had is suspect about
That's right. And I think many expected that because, the establishment survey versus household had so many gaps. And so that's kind of converging. But that means markets are waiting until August payrolls report, which is not for 4 more weeks, to really know. But I'd say, to me, it still seems like July, even as bad a report it was, is more of an aberration. And I think the trend is still...
There's a couple of things in it that people...
Yeah, there was almost a record number of people that were having temporary layoffs and people who weren't working due to bad weather. And Texas had a big spike in jobless claims. So it does look like the hurricane had some effect, although the BLS said there was no effect.
On Thursday night, one of the people at your shop said 53.90 looks like a good S&P support. Do support levels mean anything? And you want to give me another one, or is it just another one to go through?
Well, because it didn't hold, it means that there are other support levels that could be important.
It might not hold.
Yeah, it could not. I think that the VIX is telling us that.
Watch the VIX.
Yeah, because it spiked Friday and then it's spiking again today. I mean, the last time the VIX was at this level was April 2020. So for an investor, that tells us kind of where we are, which is we know markets are nervous and they have to unwind, but it's not been a bad time to be thinking that there's a big opportunity on the other side, because once the VIX starts to calm down and markets have already corrected, we know that there's opportunity. Right. Knowing that, of course, it's August, as you point out.
You think the VIX high 40s is where it's going to peak, or low 50s? I guess, it's up 100% almost.
Yeah. The VIX may not have a ceiling because we know in the next couple of days there's also some geopolitical events on the horizon.
And Israel, and Iran, and we got politics here.
I mean, that's escalating. Some people think that's going to turn into a nightmare this week.
Today,
or
tomorrow. I mean, we don't want to.
So I think that's why it's all coming to a head this week. I mean, to me, it's a very important week because we know it's hard to catch a falling knife, as you're pointing out. Support levels are being broken, but mortgage rates are falling. The consumer's in pretty good shape, and the job market. I think it's very unlikely.
But so if the knife is falling, and you like catching falling knives, I know you. So the question is, at what point do you catch said knife?
I spent a lot of time talking to Mark Newton, our technical strategist, over the weekend, and I think that there is a reprieve coming this week. Like, who knows? It could even be today, right? We could open down huge, and then after 11 a.m., we could reverse higher. But I kind of agree with Joe that this is still August, and I think that markets traction really doesn't come back till October. So between now and October, it's maybe a range-bound market at best, but there'll still be opportunities.
And we could call it NVIDIA, basically. I mean, it might as well be Bitcoin, what is Bitcoin? Gold's hitting new highs, Bitcoin, yields. People look for safety. They buy treasuries, they buy gold. People don't buy Bitcoin for safety.
Yeah, Bitcoin is still mostly a risk-on asset. And, there's